right at 10 o'clock. Let's get it started. Welcome to our biweekly webinar. We got an exciting one for you, but I do have to say we are missing my co-host, the amazing Jim Brown. He actually got caught in that huge storm up in Boston, and his flight got delayed. He was supposed to be flying out yesterday, and he couldn't, so the flight got delayed. So he's actually in the air right now, but he sends our thoughts and to us, from up in the air. He's sorry that he missed it, but really excited about the webinar today. We have Greg Buck with National Risk Experts. And, as an agent, just a little bit about myself. I've been a real estate agent here in South Florida in the grind like you all for over 20 years. And one big objection here I'm getting from a lot of my clients is, hey, wow, what about these insurance costs? I've had cases now where they've almost doubled, and I'm getting that objection a lot. And it's a tough one to handle. And the clients are asking, why is that? Is that something that's going to continue as a trend? What's happening? So, the big thing on this webinar that Jim and I want to do is add value to agents and get us prepared to be able to close deals, right? And this is a real objection right now. And, also too, I'm the founder of RealTrade, which is an online real estate platform or a marketplace and social media platform for real estate. We have thousands of buyers and sellers in there. We just passed 1,500 agents from over 100 different brokerages. Cool thing is free for agents, and you can get free leads off your own content. Imagine that. So I tell everybody to check that out. But yeah, without further ado, let's get this started. Greg, we're happy to have you on the show. We're glad you're here. And let's demystify this insurance cost of why it's high, this big objection us agents are getting here in real time, and give us this information so that we can pass this on to our clients and hopefully close more deals.
Very good. Ryan, thanks so much for having me this morning. I do appreciate it greatly. As Ryan stated, my name is Gregory Buck. I've owned National Risk for 21 years. I had 22 years now, I guess. And we are a specialty agency. I won't say boutique, but maybe that's the best term I can come up with. We don't market much. All we do is referral business for the most part. But that in turn should speak for itself. And I know we've worked with a few of you out there that, we've been able to help you and assist you when it comes down to it, being able to close some deals that maybe otherwise wouldn't have been done. And as Ryan says, I've been just a little further, I've been doing this for 30 plus years. I've worked on with carriers, insurance companies like AIG in the past, trying to set up what structures they would take in South Florida, why they would take them, what would happen if they didn't, what was the benefit of the programs that they were rolling out. So I've done a lot of work with insurance companies in developing products, and also we did, not that it ties to this at all this morning, but we developed a medical malpractice insurance company that may eventually tie to what we're talking about this morning, because one of the things we're talking about is creating reciprocals, which are insurance companies run by an attorney, in fact, but owned by the subscribers. And in this case, we did that for medical malpractice and made it very successful. When there's no carriers left, we brought them back to the state from 2003 onward. So we're working on a bunch of different things right now with our companies to, again, gain control of the chaos. And that's kind of what I've titled this morning, which is the Florida insurance marketplace to assist your clients in providing the best options for their insurance needs. And we'll open up for questions. I guess I have no problem, Ryan, whatever you feel like.
Yeah, if anybody has a question, they can raise their hand or they can write it in the chat. We'll get the questions answered. And
yeah, I have no problem. It looks somewhat informal in the sense that, we should, if you needed me to stop, that's fine. I'm happy to do so. But the bottom line for us is let's see if it's of value to you and what we can do to help you out. And so going forward in the beginning of this, one of the biggest reasons.
Why don't you share your screen, Greg?
Oh, I thought I had done so.
Yeah.
Did it work?
Not yet.
Oh, there we go.
What?
All right,
Can
if
you
you
guys
could
see now?
too, yep. If you could too, mute your screen if you can. If you're speaking.
What's that?
I was just telling some of the agents to mute their screen.
Oh, mute their screen. Yeah.
Yeah. All right. Cool.
Okay. So going back, basically, then we're trying to gain control of the chaos that's going on, and it is truly chaos. I wish there was something that I could say that made it much better.
I got to figure that out.
Mm-hmm.
But bottom line is, for me, is that we're here to help you, and we can do a lot that other people may or may not be able to do. But let's get an idea of why we're at this situation that we're in, and how we can explain to your clients better. You guys can explain to your clients a little bit better, maybe, how this is happening and what's going on. 2 weeks ago, I did an interview with Channel 25. We do those quite regularly, and one of the things that we discussed was the issue of, would any of the measures that the state has taken, such as providing $1 billion of reinsurance for the insurance companies. Well, my thought was, no, it's not going to really help. It might help you about as much as an alarm credit on your home. But that's about it. And when you look at $1 billion, I said, well, that'll take care of Admiral's Cove and maybe Jonathan's Landing, but beyond that, you're really not going to see much. And so what I saw yesterday is that only 3 companies have signed up for the state access to that $1 billion. And if there's one thing that's driving the marketplace, it is that ability to have the reinsurance. So the first thing I wanted to bring up this morning, and I think it's the most important aspect, and it is the reason why we're having these problems, it's the reinsurance cost. So basically, a lot of you may already know this, but what is reinsurance?
Yes.
Reinsurance is insurance for carriers, transferring risk from one to another to reduce the likelihood of large payouts for a claim. It allows insurance to remain solvent by recovering all or part of a payout. And companies that seek reinsurance are called ceding companies. Types of reinsurance are facultative, proportional, and non-proportional. And as far as the reinsurance companies, a good example would be that, we had forest fires a few years back in Australia. Well, all these losses are going to one or two or 10 or 50 carriers on the bottom side of it. And then in turn, they have their carriers, which they go back to after a certain loss. So I'll use a company that you may all be familiar with, and that company would be Universal Property and Casualty. Most people know of them, they've heard of them at least. And the thing that's been really interesting is that this last year they went from paying, I believe they were paying about 80 million in their reinsurance costs, maybe just over 100. And it went from that level to it went from the 100 million to 639 million. So these companies are paying reinsurance that, basically, if they can't get it, they're out of business anyway. But when you look at that kind of an increase, and they made Universal take a $100 million deductible. So just like you have a homeowner's deductible for wind or all other perils, that's what these reinsurance companies do. And these companies who are in the market, such as the Universals, the Olympuses, so on and so forth, on the admitted side of the company, are basically going back to these companies and buying their reinsurance. Now,
so just a high level. So the reinsurance is basically insurance for the insurance companies.
Yeah, bottom line, it's really that simple. And to get involved in what type of reinsurance they've got, proportional, facultative, non-proportional, it's in this presentation. I don't want to spend a lot of time on it because it really doesn't matter.
Yeah.
But by covering the insurer against accumulated liabilities, reinsurance gives the insurer more security for its equity and solvency by increasing its ability to withstand the financial burdens when unusual events occur. And again, unusual events, well, we are the place for unusual events in South Florida. We are the hurricanes, we are the floods, we are the tidal surge, we are forest fires, we are all those things. And ultimately, when reinsurance is discussed worldwide, Florida is always a part of that mix, and not for good typically. And we're in a position right now where we are facing rates that have gone up so substantially that when companies have had it and bought it, so a lot of times what will happen is companies can buy 3 years in advance. So if the companies were smart enough 3 years ago or 2 years ago to buy it 3 years worth, they probably got themselves a better deal than what they're up against now. But as we go forward and these reinsurance treaties are renegotiated, well, then we're going to have some more problems. And I don't think for everybody we've seen that. So basically what we see in the insurance marketplaces are companies that are still writing. And if they're still writing, that means they've got their reinsurance in place. When they run out of it or they run out of aggregate, they're done. They're going to shut down. They're going to not write. And the bottom line is we're used to these names like nowadays of the universals and the Florida only companies. Well, most people don't realize that it's only $5 million in assets to start an insurance company. And of course, you have to file your filings with the state of Florida, so on and so forth. So a lot of these companies that are the smaller Florida companies, where they first start out as what they call takeout companies from citizens, become either successful or not successful, typically within the 3 to 5 year period. So they roll out these programs and they say, well, we're going to acquire policies from citizens and now you're going to be insured with us. Well, that becomes a problem because ultimately we know that shelf life, they think that they're going to make money in the first 3 to 5 years. And usually after that, if they have been marginally or not successful, they're going to leave the marketplace. And that's what we've seen with a lot of these companies that have gone out in the last couple of years here. So basically, the reinsurance plays a big part in it. And it's not just what you do here in South Florida, although regional is gauged by pricing from the reinsurance companies and the carriers themselves. They have to feel comfortable in that marketplace. And right now, I think the only thing with these last hurricanes last year was the tidal surge was more of a flood event for many as opposed to an actual insurance carrier event. That probably saved the marketplace entirely, because I'm not sure if that was all placed on the burden-wise on the insurance companies that they would have survived it. Because we're looking at almost, what is it, 200 billion in claims now from those events. And basically what's happening now is that FEMA provided a certain amount of relief for some of these companies. But what people don't realize is that if you didn't have flood coverage, well, FEMA may be able to loan you the money, but now you're indebted to the government and you're going to have a payment to them in many cases. And that's not the ideal situation for you or your clients. So there are a lot of different issues that go into this, but I just want to branch into a few. And again, don't hesitate to stop me if you have a question. But the bottom line is we're looking at different things right now that we've not seen since 2005 and 6, when we had the 4 or 5 hurricanes in a row. And even then, we haven't seen anything like this on the numbers. In fact, I gauge my commercial properties by what they cost per $100 of value. Now, I did a property over in Tampa. It's a $2.5 million property yesterday, and it was $1.46 for what they call joisted masonry. So this concrete structure on the bottom was the block, and obviously the frame roof process. And that was $1.46 per $100 of value in Tampa. That same thing down here is in the Tri-County region is $3 to $4 per 100. So when you're looking at the homes, they're going to correlate somewhat with that number. The difference being in that the companies that are on what they call admitted companies to the state, who file with the state, who carry the reinsurance, but remember, only have to have 5 million in assets. They can't change or adapt that marketplace very often. They can apply to the state. If the state believes they should have an increase, they'll get it. So, the bottom line for us is that the reinsurance is a requirement. It's a necessity, but guess what? They're not going to lose money. They might lose money this year, but they're not going to lose money.
Let's give some examples, Greg, of some couple of reinsurance issues.
A couple of examples. Yeah, let me get to that in my next
cool.
in my next couple of screens here. So bottom line is you have the Lloyds, you have the Global XLs, you have some, gosh, there's probably 15 or 20 that I was looking at this morning. I thought about putting them in the slideshow, but bottom line is they're generally out of Lloyd's, or excuse me, out of New York or of London, sometimes Hong Kong, sometimes, depends on where it is and what risk they're going after. But bottom line is they are the ones that control our destiny when it comes to the marketplace. So we're up against it right now in our difficulties, and the reinsurance, if all goes well this year, we're going to be fine. But if we have another hurricane, I really, I'd like to be hopeful with it, but I'm not sure. I'm just not sure what'll happen. Whether
So it's, I mean, this is just with the reinsurance, that's a global phenomenon, because obviously.
that's a global phenomenon. It
And then
doesn't
you
really
have the
matter.
local, obviously the local aspect as well, with the local agencies, but they still have to rely on the reinsurance, which are global. So they're taking into account the risk throughout the whole globe. So
Yeah, and now
it's
this year
not
we have Canada. Canada's got the forest fires this year. We've never seen that before. So those are things that will matter down the road, depending on how much damage they do in the continental United States. But I don't think from the perspective of what we're looking at right now, as long as we don't have any more, we'll maintain. But let's look at some of the things that go along with this. And you guys can look at these yourself, and you'll have access to the spreadsheet or the slideshow if you want it. But basically, that there's the three types. There's the facultative reinsurance, there's excess reinsurance, and so on and so forth. You can read through basically, but our premiums are all determined based on these things. Now, let's get on to the next here. Bottom line, there we go. Okay. Since the fall of 22, reinsurance rates have seen a significant increase, and this trend has continued through 23, and it has estimates that reveal the property and reinsurance rates surged 60% during the January 1st renewals of 23. Tightening of reinsurance market could be attributed to confluence of factors, including macroeconomic uncertainties, and this is all gobbledygook for, what, we've had losses and problems, and it's going to continue. Bottom line is everybody's paying more. Primary insurers face considerable challenges that as they negotiate reinsurance contracts. The industry was battered in 22 by numerous setbacks, including the losses from again, who would think the Russia-Ukraine conflict would be tying to our problems, but they do. And well, they do certainly from our tax dollars, but they're, from a reinsurance perspective, it's a big deal. Increasing frequency and severity of natural disasters has become such a problem. We look at these reinsurance rates to go up another 45 to 100%. Probably through 24, the 20 to 40% additional through next year. So we're looking at hundreds of percentage points that we're looking at going forward.
So quickly here, List, as an agent, as an agent here, looking at this, and you anticipate the insurance costs now because of the reinsurance going up a what percentage to the end buyer? Right?
Well, let's look at, I've got a chart here, and I think this kind of explains real quickly. This next one I'll go through real quickly. These are the companies that are gone. Okay, these are all insolvent companies, and we've got 15 of them just in the last 12 months.
Yeah,
I put farmers down at,
farmers just
farmers down at the bottom. Even though they're not truly insolvent, they are actually no longer writing, so I just throw them in here. But the other 15, they're gone. They're no longer going to write. They're not going to come back. So that's a big deal. Now, the cost of reinsurance. What I've got here is, I think, a pretty reasonable look at what the costs are. And if you look at the property and casualty reinsurance and the leading reinsurers, these have gone up, and they don't look that sharp, but basically you've gone up over 100%, in the last, let's see, since 2014, probably, we've gone up over 100% in the reinsurance costs and the overall leading reinsurance. And here's the thing, that's an average of all. But when you look at the reinsurance companies who will write, very few of them are probably going to be tied into the blue line for South Florida. Most of them are in Florida altogether. The ones that are writing in Florida are going to be in the $500, $600, $700, $800 per thousand of costs. Is that per thousand? Yes. So if that gives you a better idea of what we're looking at as far as the green line, because that's where I equate South Florida and Florida in general in the cost increases, because they don't have enough data to determine what you've got in the blue line as far as the South Florida losses yet, because we're still incorporated with the losses that we had from the hurricanes last year. They still haven't equated all those. So thank you. Sorry. Okay, so let's get into the reasons and the what's and the why fors of what we can do to help you out. I don't want to spend a lot of time on the others. You could spend more time if you want to look into reinsurance. It's pretty dry and it's pretty boring. But what are the things that are causing these rates to increase on that we have control of? Okay, that's the best way I can put that. Not that we can control the other, but we can control these. And when you're looking at your homes that you're going out to either sell or that you're talking to your clients about, the issue for us is to what can we do to assist? And the biggest problem that we have is lack of updates, clearly for all. And these things probably will inhibit your sales and also keep the marketplace being at its peak, where we should be in a market where a year and a half ago, 2 years ago, we were booming. Now it's getting a little harder to sell those properties. Interest rates obviously play a part in it, and that's not what we're here to talk about this morning, but it ultimately comes to a big part of what we're doing as well. So some of the things that we can look at here, and some of the things that the insurance companies absolutely require of us, is these updates. And what are those updates? So the things that we look at first, obviously the roof is a major factor, and it's a big problem for all of us. That major factor is that they want these roofs to be less than 20 years old and have a 5+ year lifespan left. So that's why when you have somebody going to Citizens, they're going to have an inspector go out and verify that there is indeed 5+ years left on this roof before you would encounter any damages or problems. So the bottom line is that these roofs have also, from the perspective of some of these other companies, they've also looked at it and said, well, we're going to give an actual cash valuation settlement. So what does that mean? So if your lifespan on your roof is 20 years, and that's what the warranty is from the manufacturer, well, basically each year that you are insured with this carrier, and there are a number of them, they will take that down and pay proportionately what that roof valuation would be. And honestly, if I have one item that we can do and should do in this marketplace, that's going to be it. These companies have been giving new roofs for old roofs for the last, 10 years or so. And that's why they put in this law with these public adjusters. So the public adjusters have basically forced us into a situation where they are going out, knocking on the doors, or previously anyway, knocking on the doors and say, hey, we have we can get you a new roof. We notice we have a couple tiles missing. That came from the hurricane, right? Well, it could have come from golf balls. It could have come from a falling tree limb. We don't know. But the bottom line is that's what these public adjusters were doing. And that's why some of the legislations that's gone into place in the last 2 years has helped to quell this. But these insurance companies, and look at it, if an insurance company is charging you $3,000 to $4,000 annually for a premium, that's kind of low now, I get. But the bottom line is, for them to replace a roof, well, how many times are they going, how many years are they going to have to insure you before they catch up with that? And the bottom line is, they're not going to, because if they're sitting on that risk for 5 years and getting $3,000, well, they're not even going to get the amount back for the roof that they've replaced. So bottom line is, I think most of where these companies are going, and they have to verify it and they have to go to the state for it, they have to get that actual cash valuation settlement. And that is where we're heading on all the companies. So that's a big deal. Now, the inspection services, who knows what they're really doing, but bottom line is they're in a position where they're not going to be able to get away with it for long, because Citizens has their own inspectors nowadays, and so do many of the companies. They've gone to that rather than having a third party. I think it's the only thing that really works, because a third party's interest may be in the carrier's best interest, but it also doesn't really give them a full picture. The next item would be, and anybody has questions, keep going. I'll keep going unless you do. Plumbing. The plumbing has become a big issue, and why? So what are the number one claims that we have in South Florida? People say, well, it's hurricane, it's roofs. No, actually, it's water damage. And water damage in the units. And I will say that I know that we probably have 3 to 4 or 5 a month of these water claims. And so what has happened is these companies have done several things to try to diminish that cost to them. One has been that you've updated the plumbing in the last 15 to 20 years. Also 10-year update on water heaters. Why? Well, it's pretty obvious. They're the ones those are the things that leak. But the plumbing, the piping, I have a client that lives in a $2 million house. He had 2 claims within 6 months of each other because rats came into the ceiling and chewed through the PVC and ended up causing water damage throughout the entire house to the tune of about $100,000. So those are things that they're limiting. So they'll either exclude water altogether, or they will go ahead and give you a $10,000 allotment for it, and that's if you can verify that indeed your plumbing has been updated. And sometimes they don't. You can find companies that will accept the older, but if you're talking about what is going to get you the most beneficial rate for your clients, it's going to be that plumbing has been updated. Obviously, they won't take hazardous galvanized or cast iron anymore. If that's a problem, usually that's in the beneath the structure itself. Most of the times, it's something that's going to have to be replaced, and that's where we put into to force these builders risks a lot of times, so that the people have time to take care of these diminished items. The next would be wiring. With the cloth and aluminum wiring is a big problem. That's the old Northwood sections. That's the downtown areas. A lot of them have been done now. But obviously, when you go back to the 50s and probably into the 60s, you still have cloth and or aluminum wirings. So no carriers will write that. We can occasionally get an allotment, but most of that we're going to cover under a builder's risk. So if your client has that, you just want to make sure that when you're negotiating the deal, that the seller has some idea that they're going to have to give on that in order to make sure that gets taken care of. Otherwise, they're not going to have insurance. Updates on the AC is a big deal, but 20 years on that is typical. And of course, the mitigation inspections, they're going to be required every 2 years. And a 4-point basically is where they go back and look at everything that's been updated on the house and give a real bird's eye view of what has been done to reflect the changes and updates on that house. And that's going to be for anything over 25 years, sometimes 20 years. It depends on what the home is and where it is and all that kind of thing. So bottom line is, these updates are what will kill a deal for your clients. So your negotiating skills or your ability with these items with your buyer and your seller really matter. And I think that from our perspective, our job is to, once you've done that, to come back and say, well, this is what we can do for you. So as we go forward, some of the things that we talk about, one of the things that's a big issue in addition to this, and I definitely don't want to leave this out, is tied to the wiring and to the electrical. Now, electrical panels are a problem. There are occasionally we could find somebody that will take the risk for a period of time on the verification that it's going to be updated. But these common electrical panels are a lot of times in these older homes. They have the Federal Pacific. 25% of all panels were all defective, the Zinsco, the Sylvania, the Challenger. So these are all older, but yet still a problem. And we see them all the time, specifically we see them a lot in condo buildings. We see them in older homes, obviously, but we also see them in a lot of commercial properties. So it's a big deal, and we just want you to be aware. Now, the average cost isn't so great in replacing the panel itself unless you've got the wiring that is also tied to the aluminum and or cloth wiring. So if you got all those together, you're going to have to do everything. If you've just got the panel, that shouldn't be but a couple $1,000s typically to replace. So that is a big part of this. Now, let's offer some solutions, okay? Because it's not all desperate and it's all not bad. It's just a part of living in South Florida. And my question is, do you want to live in New York? where you're paying a local tax of 14%, you're paying state tax and whatever else on top of it, or do you want to live in South Florida and pay a little bit more on your homeowner's insurance to live here? And I'm going to go with Florida every time. Of course, I've been here for a long time, but bottom line is we have something that virtually no other state has, and that's the sunshine. So bottom line is, we look at various carriers when we're going through this and what we're doing. So when you call us and you're trying to say, hey, what can we do? This is a very difficult situation. Can we make it happen? Well, as I was stating prior to the meeting here, we have sometimes as many as 3 carriers that we have to put into a risk. We may have Citizens on one part of it. We may have a builder's risk on part of the structure. So we had a home in Northwood. We had to get the wind from Citizens. We had to get the builder's risk from US Assure, and we got the balance of it from an admitted company. So we were able to put these 3 companies together on a $2.5 million structure. So bottom line is, there are doable things that we can have available for you. And I looked at the number of carriers writing right now. In South Florida, we're probably talking about 10 to 12 companies that will write. And that's a very much a misnomer, because these companies are really not writing much in our, Palm Beach, Dade, and Broward counties. Maybe sometimes in Martin, maybe sometimes in St. Lucie, but for the most part, these admitted companies don't have the resources to handle large claims on older structures. So what do? So we go to the surplus lines. Now, many of you have heard of them. Many of you have either heard bad or good. It depends on what agency you're talking to. If you talk to State Farm, well, surplus lines carriers are the devil. Well, in this case, though, surplus lines has saved our marketplace in South Florida. We would not have insurance for many of the structures that we're involved with on a day-to-day basis if it wasn't for these companies. And these companies could be QBE. It could be, oh my gosh, there's Lloyd's, there's companies like Lloyd's that are that size. There's, anyway, I can come up with dozens of them. But bottom line is, these companies, what they do is they come into Florida. They're not admitted to the state of Florida in the sense where they go to the state and file their forms and file their rates. What they do is they come in and they will say, well, we write this risk, and this risk, but we're going to exclude this, and this. So they're going to exclude items. They're going to match items sometimes that aren't covered on other policies. But the bottom line is, it makes it available for your structure. So what do you do when you have a structure that's over 750,000? Well, people say, well, I'll go to Citizens. Well, good luck on that. They don't want the homes. If you're over 650 with Citizens, by the time they get done with it, it's going to be rare when you get it. I'm not saying you don't try, but you have to submit it. You got to give them 30 days. And many times you're not in that position to wait 30 days to sell you make a deal happen. So what these surplus lines carriers do is, one, they provide financial stability. So every carrier that we work with on the surplus lines company, with the surplus lines companies, has to be an AM Best A or A7 or higher. 7 being their claims paying ability, A being their financial overall structure of the company's strength. But most of these companies that we're dealing with are located in all 50 states, usually with billions of dollars in assets. And again, they will include or exclude what admitted companies won't cover. Now, that's a big deal, because again, if somebody's had 2 water claims, what are they going to do? Well, they can't even go to Citizens. So what are you going to do? You're going to have to take them to the excess market. And it's sometimes, the last resort, but ultimately we can tailor that coverage. So what happens on a policy standardly? If you have $1 million home, well, they're going to give you $500,000 in contents. They're going to give you, 10,000 for this, 20,000 for that. It's all kind of a what they call a package policy. Well, what they'll do with these admitted or these non-admitted companies, they'll say, well, the structure value needs to be $1 million. But how much personal property do you really have? Oh, 100,000. Okay, so let's take that down to 100,000. Let's take some of the other things down off of the policy, the water, the this, the that. And so what we try to do with those things is make them affordable so that everybody that we deal with can somehow get into the home that they want. And that's something that we're very adept at, that you're not going to find from your State Farm or All States. You're not going to find it from your, your most of your agents out there are not going to know. Some of the bigger agencies might, but are they going to want to deal with your 3,000 square foot home built in 1925? I don't know. A lot of times they don't. You know, you Brown and Brown, they're probably not going to give you the time of day if they don't have to. If you got a good relationship, that's great. That's fine. But ultimately, the bottom line is for us is to tailor that policy to make sure you've got exactly what you need for your client, and it's at a sellable rate, which is a big deal. So then the next item, as we've talked about, is the builder's risk insurance. The builder's risk, usually from US Assure. We can do this in many other companies, but a lot of times it's going to be depending on where it's located. So if it's on a barrier island, well, we're going to have a problem with wind with US Assure. So we're going to write all of the perils, the fire, the vandalism, the theft, all that is going to be with US Assure, but then the balance would go to Citizens. And so that's how we'll get around those problems. But basically, it allows you time to build to redo the roof, to redo the wire, to redo the plumbing, and all structural repairs that you need to have done in order to get your client, for your client to be
I just
happy.
want to chime in here. This is builder's risk has saved me on a couple deals, like in Flamingo Park. If you have the cloth wiring, right? If you have some plumbing issues and you can't get normal insurance, step in here and do builder's risk, and they'll give you a policy for like a year, right, Greg? You know, where they have
Yes,
the time to do
6
those
months or a year. Yeah.
yeah, do those repairs, and it can save the deal, guys. I've actually had a builder's risk policy on some deals where we couldn't get insurance, and we were scrambling, had the deal under contract. You know, obviously some things came up on the inspection, and it looked like the deal was going to blow up, and a builder's risk policy came in and saved the day. And
Yeah, and I think that's
you negotiate with the seller. Obviously, I was representing the buyer. You negotiate with the seller of getting the credits for the repairs, you know, that are needed, and yeah, you save the deal and move forward. And it's an awesome thing to have.
And as I recall, Ryan, too, we've had calls at 4 o'clock on a Friday to get these things done, you know, and we get them done for people. And I'm not here to sell you on who we are per se. I'm just giving you an idea of what can be done. You know, you can work with whoever you want. I'm nobody, but bottom line is we know how to get these things done, and I guarantee very few will find that.
Yeah.
So,
but it's a great quiver to have in your toolbox if you get nervous that a deal's going to blow up because a bunch of things came on an inspection. You can't get insurance. It's a good one. Awesome.
Yeah, and it really does make the difference. So, like you say, let's salvage all the deals you can, and this is one of those ways that we can help you do it.
We got about 10, about 7-8 minutes left, and then we can do some Q&A. We got some questions in the chat.
Yep.
So awesome.
So yeah, I just have a couple more basically. One of the questions that came up previous, wood homes, are they insurable? Well, they are, but again, subject to, is there cloth wiring? Is there, all those things that we just went through? As long as they meet the other guidelines, yes, they are. But again, maybe sometimes like those old homes down to West Palm Beach, it may be that they end up with either a non-admitted company or they go to the builder's risk side. Okay, flood insurance. Basically, I want to get through this fairly quickly, but it's a big deal. So flood insurance is becoming more of an issue. And why? Well, I think it's a wise choice for all of you guys to talk about flood insurance with your clients, because we're in a position now where you're looking at all these claims that came over from Fort Myers and so forth, and Naples being huge. And if they didn't have the flood insurance, well, they're indebted for a long time, more than likely. So as you know, all homes are in a flood zone. Now, there could be A, B, C, X, V, but not all zones are required for flood insurance by lenders. B, C, and X are not. So you have AE, AH, AO, X is not. So V, a lot of times V are the stilted and or buildings that are built on, pilings. Flood insurance pricing is obviously determined by zone and elevation above grade. So this is a big deal. What's the biggest cost factor involved in the flood insurance? It's understanding that the elevation above grade is what really determines it. Now, it could be also how prone is that section of town or that area of town to flood, but it also matters that it needs to be a certain amount of feet. So if it's 1 foot above grade, it's a number. If it's 2 feet, 5 feet, 10 feet. So bottom line is you can get a flood determination, which will tell you whether or not you're required to have it, but you need an elevation certificate, and it must be in the individual's name. So obviously you guys from the title companies, you understand all that, but the bottom line is that when somebody says, why, we can determine, yeah, we can look in 2 seconds and find out if you're actually in a required flood zone. But then we must have the elevation certificate to get the actual flood cost for you. And basically what's happening now is citizens, anything above 600,000, they're requiring you to have flood insurance now. And that said, up in 2027, all policies with citizens will be required. Now, what's the cost of it? Again, it's hard to say, but let's say it starts out at $600 and goes up to thousands of dollars, again, depending on that grade and the location where it is in town. Elevation certificate determinations that are more than 2 years old should be and need to be updated, because the FEMA maps have changed over the last couple of years as well. And then anybody who you're having who's buying a lot, who's building a new property, make sure they build that. If they're in a required flood zone, and even if they're not, have them build up that pad as high as they're able to financially, because obviously it makes a big difference, but that the height of the pad reduces the rate, bottom line. So if you remember anything about it, higher pad reduces rate for flood. And so bottom line, that's, you know, that's how the flood works. And that's pretty much it. You have my name and number here if you have any questions you want to call. I put Sandy, who's our expert in the field, on this as well, because she is really, you know, I work more on the things needed for the agency and also the commercial side of things. Sandy is the ultimate homeowners person, and she's been doing this for 35 years. She owned all state agencies up in New Jersey, and obviously she's been with me for 13 years, and we're very, very happy to try to assist. Questions, whatever problems you may have, we'll be able to try to help and assist you in these matters.
I want to back Greg really quickly. We work with them a lot here in our office, and I haven't worked with Greg, but Sandy's great. I mean, we've had the day before where we need insurance, we call Sandy and she pieces something together. Even sometimes once you build that relationship, I'll say that Sandy helps us even when we have other insurance carriers, like, hey, Sandy, does this cover our lender? Does this cover our investor? And she's really good at she knows her stuff really well and can piece it together for Jim and I really quickly, and it's very appreciated. I would definitely recommend using them to anyone that is looking for a reliable source to get deals closed.
Excellent. Thank you very much. I appreciate it.
I have a question for you though, Greg.
Sure.
Something we've been dealing with a lot is that associations, right? Homeowners associations, I've seen lenders walk away from deals based on the insurance that the association is carrying or the coverage the association is carrying. Have you ran into that?
Oh, we are running into it every day. Yeah, the association is a problem. And I focus mainly on single family, because condo is a whole, and homeowners associations are a whole nother factor. And what are some of the things that are affecting that is specifically in this case the cost of making sure that these units are updated, whether it be a condo or a homeowners association. And why? Because the state now mandates that you have to have them done in 20, I think it was 20 years on that. I've forgotten since the last time we talked about that, Ryan. But bottom line is, it also puts a lot of the liabilities back on the board members if they don't comply. So yeah, just in my association this year alone, we had to replace 22 buildings for the insurance company because they were over 20 years of age. But ultimately, it didn't take care of all the roofs. We have another 20 or so to go. But it's upon us as a board to make sure, hey, you know it's a problem. They'll come back and make you liable, as they did with that condo down in Miami. They hit everybody. They got $1 billion out of that claim. How in the world? I have no clue, because that building couldn't, let's say the building was what, 20 to $30 million. Okay, well, you've got that, you've got this, you've got that. How did they get to $1 billion? I don't know, but they must have sued everybody and their sister, you know. So yes, it is killing a lot of deals for people. I look at, some of the units in our development that we're selling within days. Now they're taking a couple of weeks or a month, and it is going to be a problem. I would say the condo market itself, if you're going to go to the older condos and you're unclear as to whether or not they're updated, well, you better be good at what you're doing. You better be good with your words, because you may not be able to close that deal based on that one item alone of how much
I had
it's
an
going to cost me in
association
those monthly
yesterday.
dues.
I had an
What's that?
association yesterday say that they know they don't have the proper coverage, condo association, and
Yes.
that if the buyer's taking out a loan, that just forget about it, basically,
Yeah.
that there's no way that the lender's gonna lend in the neighborhood.
Well, and you've always had things like loss assessment that's been on these condo policies for a couple grand, on each policy. But really, that became a nightmare, because I don't know if you guys remember, but when the Tierra building became destabilized, I think the unit assessment was 300,000 per unit.
Yep.
Like everybody would walk away from that. Why would you put 300,000 into it? Well, maybe you've got the money, that's great, but ultimately that's a huge factor. And if those liabilities are there, you better understand that those liabilities are there when you're buying, or that as far as you guys go, that you're making your clients aware that this is going to be or could be a problem for them. And they better understand when when the seller's selling and the buyer's buying, to make those allotments for those cost increase, because I don't think we've seen the end on the condos yet.
Yeah, we did some great webinars on Senate Bill 4D, Jim and I, and really unpacked and really went into that, of how that's going to affect the condo market. And obviously insurance is a big piece of that, especially if there's issues that are going to come up from these
I don't think we've even begun to see it.
Yeah, the milestone inspection reports, which aren't due until the end of 2024. So, we're a year and a half away of that shaking out. So
well, and again, I have a small condo down in Fort Lauderdale. I just did this last week. It was $3 million in value. Guy paid off the loan for the association, because most of them are old. It's an older older building, and they're mostly rented properties now. So he was able to do that. But otherwise, he would have gone from paying $35,000 with wind 2 years ago to about $120,000. And that's on a $2.5 million structure. So,
awesome.
we're seeing these rates just skyrocket when it comes to this.
Yeah. So let's get to some questions here. Jeff Stewart had a question.
Sure.
Does the type of roof, whether it's metal, tile, shingle, affect the insurance premium? And if so, I want to know, how much, let's say you have a buyer, right, that's looking at, purchasing a home, the roof's shot, and they go and get a builder's risk, to do the roof. What type of roof would you recommend?
Well, I would say that the type of roof, obviously HIP is going to give you the biggest credit versus a gable roof. And that's, the gable, obviously all the way along, it's the same, whereas the HIP comes to a point in different spots on the roof. That's the biggest factor. Now, that said, obviously the better the roof, the better quality of the roof, and the tie downs associated, that's going to be the biggest factor. So if you've got a tin roof, yeah, those are going to have some a little bit higher rating. Is it going to be so substantial? Probably not so substantial, but it does play a small percentage. Let's say 1 or 2% of the cost of the policy. Maybe it's not a huge matter in that respect, but the gable does play the biggest part. Does that answer?
Yeah, that answer. So it's not like whether it's metal, shingle, or tile, it doesn't matter so much as whether it's
again, a percent or two, but not really the biggest issue. It's gable versus HIP.
And we have another question from Jeff. He goes, I have a client that has a dwelling coverage with Citizens, 611,800 with no flood insurance. Will Citizens reassess the client's policy if it's over 600,000?
Well, they're going to do a couple things. How long has the policy been in force? Is it new?
Go ahead, Jeff. You can answer. You're on mute. You're on mute, Jeff.
Oh.
Okay, he said it's new. Yes, it's a new.
It is new. Okay, so if it's a new policy, he got in at that $600,000 level, they should be assessing him or should be requiring that flood insurance takes place. Okay, but assessing him, can they assess? They can assess anytime they want to. And when you sign those Citizens documents, you can be assessed, and they're going to assess everybody typically But the flood insurance is another issue aside from an overall assessment, because they don't do the assessing for flood. They'll just make you get it. So.
All right, cool. Any other questions? Anybody else have any questions? We just unpacked a lot. I know it's can you here Kira asked, can you repeat the portion about roof replacement costs?
Oh, as far as whether how they gauge the replacement value. Yeah. So what happens is a lot of the companies have said, well, you have an 18-year-old roof, we're going to go ahead and replace that at $40,000. Well, okay, but if you look at any business model and you say, well, it has a 20-year life, 18 years of those are gone, how in the world should this company be giving new roofs for an old roof? And so what's happened is these companies have gotten the approval from the state to say, okay, we're going to do a pro rata situation where we have, if it's new this year, then next year you get 19/20ths of the cost, 18/20ths, 17/20ths, so on and so forth down the line, so that you have the ability to have some coverage for it. But ultimately, they don't want to give you new for old anymore, and they can't survive with new old anymore. So it's going to be that most carriers will go that route. Now, if it's a problem, we're going to get to the carrier, if it's possible, doable on the home, that is going to give you the best option there. But we've heard a lot over the last couple of years, and one of those things was, well, we're entitled to this new roof because we've been paying insurance all these years. Well, remember, the one thing about insurance is the biggest thing, and nobody ever understands it. Insurance is a moral contract, meaning that why doesn't insurance work in, Iran or Iraq or Mogadishu or whatever it be? Because when you sign a contract in our country, you agree to share your risk with people who are of like mind, in the sense that they agree that they'll follow the guidelines of the company, your home meets the guidelines of the company, and therefore you agree to share your risk with all these other people. In other parts of the world where morality is a big problem, well, they can't succeed because everybody's trying to get what they get. And dare I say, we look at the auto insurance industry and over the last 20 years, and we've seen a decline in what companies will write, not necessarily based on ethnic diversity per se, but mindset of morality. It goes across the board. If you're going to cheat on your insurance because you can, well, then you're not the kind of person I want to share a contract with. So that's where we really stand with our insurance marketplace. And if we can't hold that together, then nobody's going to have insurance down the road.
Got it. Oh, that's good info. That's good info. Great. Any other questions? Any difference between impact windows and shutters? Oh, that's a great question.
Yeah, it's going to be a little bit, as long as they're Class A shutters, the impact glass, it's a little bit better on the impact, but it's not going to be a significant difference. If you want me to, I can get
a couple per, like what are we talking? Just
again, a couple, maybe 2%, 3% probably. Again, okay. Not the biggest issue on the credit itself. Overall credit might be 5%, excuse me, but it may be an overall 1 or 2% of the cost of the policy. So it is going to make a little bit of a difference, but obviously these days it's always better to have the impact glass if you can afford to do so.
Yeah, it's the peace of mind. And
yeah, although if you look at that it was actually our client that when we had that tornado a month or two ago now here in Gardens, that it went right down and it actually imploded her impact windows. So how do you quantify that? I mean, well, in that case, I think I'd probably been better off with the shutters, but ultimately the impact glass should not be doing that. And if there was, that's a designer defect and you can get your money reimbursed to you in that circumstance. So it's one of those things that I would tell anybody, it's not going to be what you save, but your peace of mind. And certainly based on your age, do you want to be up there putting up shutters when you've got a hurricane a day away?
That's great. Wow. Wow, Greg, this is good. We're getting close here. We got about 4 minutes. We answered some great questions. I want to give a big shout out to you, Greg. Thanks for coming on here and passing all this information. I shared your contact information in the chat. You guys can take a screenshot of that or copy that and reach out to Greg directly for insurance. I will tell you this builder's risk policy can save you guys in deals. It saved me. Reach out to Greg on that. I mean, especially if you got a tough deal with a buyer and it's an older home and you're having issues, that one thing could save you, a commission. That's a huge one, to take away from this. And obviously this other info now that you can share with the clients why the overall insurance is higher with the reinsurance and, just the cost of here of living in Florida, obviously. Big thing too, I want to give a shout out here. My co-host Jim Brown is gone, but I use Jim, at New Path Title, and he's amazing because he has this great software called Title Leap, which basically is like a transaction coordinator for agents, and it's free, guys. I mean, it's actually saved me having that. And he also, which we now have on integration with RealTrade, is you can order a title advance. It's free for agents. So if you have a property that you're going to a listing or you have a new listing and you want to know if there's any dings on the title, if there's any kind of crazy liens, you can order a title advance now through RealTrade right under your dashboard, or go to titleadvance.io and order it there too. So can't say enough good things about Jim and New Path Title and Title Leap. It's amazing. And two, if you haven't checked out yet, get on RealTrade. It's free for agents. You have thousands of buyers and sellers on there. The big thing is there, you create a profile, you own your listings, and buyers and sellers can contact you directly for free, right through the RealTrade app. Cool thing is agents have made thousands of dollars just for 10 minutes of work on that. Of course, we do have the social aspect. We connect with awesome service providers like Jim, like inspectors, appraisers, contractors. They're all on there to get connected with you as solar companies. We're going to get Greg. We're going to get you on RealTrade.
Absolutely.
So that agents can connect with you on there. So you have a great insurance agents on there. So awesome.
Real quickly, Ryan, if I might, one from Maria was cast iron piping, insurability. Cast iron is going to be likely a problem, as because it typically probably will have galvanization in as well. So likely is that that's going to be a problem. And again, that could be at a foundational level on the foundation of the structure. So, you may have to allot some higher numbers for your buyer to cede to the for your seller to cede to the buyer.
Cool. Well, great. This is good. We're right here on time here. We got just a couple minutes left. And wow, we appreciate you all tuning in. This is a weekly webinar that we have. We try to bring value to you agents here. One of Jim's favorite sayings, iron sharpens iron, right? So this information that we're gaining, this actually came across from Greg for some other agents from RealTrade asking, why the high insurance costs, and we get the conversation going, and we equip with us some info, and knowledge is power. And at the end of the day, it helps serve our clients and makes us more money. So it's a win-win for everybody. So glad to have you all on.
Well, Ryan, thank you again very much for having me. I appreciate the time, the opportunity, and whatever we could do to help your people and anybody who's listening, and by all means, we're going to try to do so. And, we all have a goal here in mind, which is to keep each other making money. And because we don't make money if you don't call us, and you don't make money if we can't close it. So
it is. All right. Thanks, guys. We'll see you here in a couple weeks. All right.
Yep. Thank you.
Thanks.
Have a good one, everyone.